Hello traders, the title of the video is Elliott wave analysis cost stock. The financial instrument that we are looking at today is Costco Wholesale Corporated, EPIC, COST, Charlie Oscar Sierra Tango. Let's get started, alright? So this is my first Elliott wave, alright? Agree or disagree? This is my second Elliott wave here. It's a flat correction, second Elliott wave. And now we have the third Elliott wave right there, followed by the fourth wave and the fifth Elliott wave. Anytime we label anything a fifth wave, we must put a question mark on it. The same rule applies for the third and the first wave. My wave count is now finished. So what we need to do is to check whether my Elliott wave count is valid or not. Usually when traders look at it, some traders may say this is okay, the third wave still going on here. I disagree, all right, and I stick to my wave count. It doesn't mean that those traders are wrong. It just means that I'm aware of those traders, but I prefer to stick to my wave count in this case, all right? The reason is that I have a small tips that I use, is that when I see like this, I go to the yearly chart, and here it comes, you can see here, all right? So you see that the shadow on top of this yearly candlestick bar here is alerting me that the fourth wave is already completed. All right, this is what I use myself. All right, this is a small tip that I use on the yearly chart. Anytime I have a bit of doubt or there is a disagreement with my third Elliott wave and others. All right, here it is. All right. So what do we need to do now? So once you finish to count your wave, especially you call something the fifth Elliott wave with a question mark on it because the fifth wave can be extended, the third wave can be extended, and the first wave also can be extended. All right, that's why we put a question mark there. If the music has changed, all right, we must adjust accordingly without fighting the price action. All right, so once we finish that, okay, what do we need to do? We can connect the high of the first wave and the high of the third wave. All right. Sometime you will see that the fifth wave will end at the top of that trend line right there, but you can see that it breaks above it. So if you start pulling back, we need to be aware of that trend line that is there. All right. If there will be a fifth wave extension, you can pull back like this and then go up more. All right. So in order to buy or sell, all right, this is what I'm saying all the time, we must have a trading setup, and that trading setup might generate a trading signal, all right, before we will consider to enter the trade. If there is no trading setup, okay, we could not have a trading signal. If there is no trading signal, no one should buy, okay, or sell. So what we need to do now, we can now, this is what we call mapping out the chart. So what I can do now, I can use the pitchfork tool here. Traders that are new to the pitchfork tool can go to www.dayprotrader.com to learn to master the pitchfork tool. So we can draw the pitchfork tool there. So it can pull back gently to return the pitchfork tool and continue to go up more. So anytime we call something also a fifth wave, we can just draw a line there. I'm just going to put it there at the closing price there. And I'll say to myself, this is a warning line. The fifth wave can be extended. So I will say to traders at this junction, priority to bullish signal above $300.61 level and priority bearish signal below that level. All right, on the edge, if there is a trading setup. All right, do you see any trading setup now? There's none there. All right, so the only thing we can pay attention to is this kind of bar that is a little bit bearish. All right, so we are watching it right there. So for us as an Elliott wave trader, our job is finished. Finished. All right. For us, we are thinking that okay, we are coming to the end of a trending phase, and there is a possibility that okay, a correction may begin. But remember that we are not trading Costco stock in the void. All right, we are trading it in conjunction with the market, all right, the S&P 500. If the market is bullish, one should be careful when one is talking about a bearish correction. All right, very, very important. All right, so sometimes traders see that they start selling using option, doing all kind of thing without any reason, and the price continue to go up more. That's not my recommendation to traders. Okay, another pitchfork tool that trader can place on the charts. All right, as one is coming to the top of the trending first, is to apply the pitchfork tool to the first. All right, and the second way, right there. Leave that one there. Okay, there's one more thing we can do. All right, using a price target. All right, can we do that now? We can use the width of the pitchfork tool. Okay, projecting that pitchfork tool in the direction of the price multiple times, drawing lines that are parallel to our pitchfork tool. All right. So this is those are the things we discussed at Day Pro Trader YouTube channel. Subscribe to Day Pro Trader YouTube channel so you may understand pitchfork tool and the market geometry. So we can do this. All right. Leave it on our chart like this. So this is the idea, is to prepare ourselves, all right, to identify the high probability trading setup on the edge if there is one. We don't want to invent it. We don't want to create it. We don't want to force it. We just want to flow with the price action, all right, without assuming anything. All right. As an area way trader, we have an edge, but our concern is to making sure that at the end of the day, we get something out of the trade. So that would be wrong to know that, okay, correction is due, and then you jump into it only to be cooked or fried like a, okay, Kentucky chicken, all right, KFC chicken, all right. It's not good to be cooked like with a professional trader cooking you. It's not good, all right. But this is okay. This is it, all right. Mapping out the chart to determine the. So there's one more thing that we can do. So we're talking about a price target level. Some trader will use, you see, this pullback here, this pullback here. We'll get it down vertically, all right? Like this, something like that. Everybody's happy. Everybody disagree. All right. Okay. And then we keep projecting at the top of the first wave. You get it now? This will allow us to draw horizontal key level. You see, so this is just a, okay, Elliott wave analysis of cost. A stock is not cost, in fact, it's a Costco. I'm using the Epic cost. So you can do this also. All right, to spot the hot spot trading zones. All right, you know, horizontal line, horizontal line. Okay. Normally I should charge you for doing this, but because we are friends, all right, this is to make you laugh a bit. All right. Okay, and then one more. Okay, I can push it one more time. Now we go into the uncharted territory. Okay, so after we have done that, okay, we just wait. We just wait for a trading setup on the edge. So after you have done that, okay, you see, whenever we see the first area where that has been prolonged like this, you apply Fibonacci extension to it. You can see that the price went above the 314% Fibonacci extension level of the first wave. And also our third area wave has been extended. It's an extended third area wave with a shallow fourth wave followed by the fifth wave. You can see that the second wave has been prolonged, talking about the duration from 2000 to 2009, you see, 9 years. Now, according to the Elliott wave rule, it's alerting us that the fourth wave will be swift or will be quick, will take a shorter period of time to be completed. This is exactly what has happened here. Bye-bye. Sometimes it doesn't happen like that. Sometimes it does happen because the Elliott wave rules, okay, are guiding us. They are not magic one. They are not magic formulas. but it's helping us to have a bit of idea what is likely to happen. So we see that if we say, okay, the second wave has been extended, there's a high chance that the fourth wave will be quick. And if it's quick, it's good. So if it goes above, that's supposed to be the third wave, you want to buy, yes or no, all right? Another thing I want to share with traders very fast, we talk about traders that are following us at Day Pro Traders. So if you are in your way trader, you must subscribe to Day Pro Trader YouTube channel. If you know anybody talking about Elliott Wave, recommend Day Pro Trader YouTube channel to them. Otherwise, they're not going to become a more advanced Elliott Wave traders. All right, they're not going to know how to use market geometry, pitchfork tool, Fibonacci extension. So what I'm saying here, you see now we apply Fibonacci extension. All right, so when you are in your trader, there are things you need to react to. All right? Can you see this? Can I tell you one more? Yeah, very fast. You see, the 161.8% is a Fibonacci breakout zone. This is a high probability bullish trading setup there. How do I know? Well, because I'm a Fibonacci trader. The 161.8, the 261.8, the 361.8 are Fibonacci breakout zone. A higher low above the 161.8%, 261.8, 361.8 a high probability. So this one here, high probability setup right there. Okay, right there. Okay, there was another one, 261. You see, this is a 261.8. There it is. It's not clean cut, but if it pull back to retest, normally I would prefer a higher low, but this is again okay, a high probability is about on the edge like this. We will say instead that this will be instead a better setup right there. Okay, he was retesting this high here. You see, pull back to retest the high. Goodbye. Okay, and so on and so on. All right. So if I change my Fibonacci, bear with me 1 second. If I change my Fibonacci drawings, bear with me. I want to bring down 361.8, 361.8. Good. Is there? Make it a default. Good. Bye bye. Okay. Now, here it is. You know, the 361.8 is right there. It's another Fibonacci breakout zone. Yeah. Now we can say, see, this is another. You see. So now again, you see, you break above this high and retest it here. This is again a high probability trading setup right there because it's only one candlestick bar here. The best place to buy because it's one candlestick bar retesting it on the monthly chart. The best place to buy is above where this high here. That's a better place to buy because it's only one candlestick bar. So people taking it up. If you buy here, okay, control it, okay, and then all right, you see now. So that's how you're going to trade. So by using Fibonacci, market geometry, pitchfork tool, wave counts, all right, you make a better decision. The yearly chart sometimes can help us improve, especially the third in your wave count, because sometimes traders do not see this. Oh, this is third wave, still third wave now. No, it's in my view, this is not. Some traders will put their third wave here. Okay, it's not big mistake. All right, it's not a big mistake, but all right, you need to be aware of it that you can use the yearly chart. So this will conclude our discussion today in your wave analysis, Costco stock, but I'll put cost stock. All right. If you have any questions, suggestion, please put it in the comment section. In due course, I will be recording another video to answer your specific question. If the video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, don't go away. Do something, please, my friend. That will make you feel good. Mark it down. Just mark it down. All right? That will make you feel very, very good. All right? Now, if you think that, George, are you kidding me, for the first time in your life, you have recorded a useful video, or the video before were really, really useless, all right, feel free to share it on the social media. All right, so this subscribe to our YouTube channel too for Elliott Wave, okay, and be sure to click on the notification bell so anytime we record a new video, you will be the first person, okay, to be notified. We are the TSTW24 trading traders, all right, talking about Elliott Wave analysis, cost stock. Happy trading to you all. Thank you for watching.